One of the weirdest things in life is that when people make a lot of money but then end up broke, when people make six figures but then live paycheck to paycheck. And it's not something that's happening just in the United States, but literally across the globe. And that's not because $100,000 is not a lot of money, but it's one thing to make that much money and a completely different thing to be financially independent. Of course, if you tune into Instagram, $100,000 will seem to you like peanuts because in this age, especially on Instagram, unless you're making like 10 to 15 million dollars, you're not making any money at all. You're making $300,000? That's nothing. I mean, people are making $300,000 in a single month and sometimes in a single week. But the problem is that if you're making, let's say, $15 million and then you have to spend $15 million, then you haven't become rich. Yes, you made that much money, but you had to spend all of that money. Take an example of Mike Tyson. This guy was the greatest boxer of all time. He made almost $1 billion. And yet, at the end of his career, he had to file for bankruptcy and he could not even afford to pay for a roof over his head. Was he rich when he retired? Absolutely not. Was he the greatest boxer of all time? Yes. So making money is one thing, but becoming financially free and getting rich is a completely different thing. It's not about how much money you make. It's about how much money you keep. Don't be distracted by social media. Every few years, we have a new influencer coming out and bragging about his luxurious life, but then he runs out of money or he makes enough money by selling his products and then he disappears. And then in a few more years, we will have another new influencer coming out. So if you're making six figures, don't think like you're making little money. You're making enough money to be financially independent. If you use that money wisely, if you invest that money wisely, you will be financially free. You will be in that position where you don't have to work and the money will still be coming in. So here in this video, I want to share with you 7 investments that will help you to get retired as early as possible. These 7 investments will help you to create those passive income sources that will get you to financial freedom. So don't be distracted by what you see on social media. Yes, these investments will not help you to get a Ferrari or a mansion with 25 bedrooms, but they will get you to the position where you don't have to work. You will have the luxury of the free time to do with your time whatever you want. So if you're ready, give this video a thumbs up and let's dive in. Around 4,000 years ago, in a kingdom in ancient Mesopotamia, there was a guy named Arcade who was poor. He could barely put food on the table. To escape poverty, he worked hard. However, when he received the payments for his services, he lived very frugally and lent most of his income to a shield maker, who then paid interest on the loan. Instead of spending that interest to move to a bigger place, he kept living frugally and lent that interest to another shield maker, thus growing his wealth even more. After repeating this process for years, his wealth grew so big that he did not have to work again since his money was working for him. So, he ended up as the richest man in Babylon. Of course, you can't lend money to a shield maker today because that shield maker will probably has a credit card or would rather go to a bank than look for you. But that story illustrates to us the power of passive income. Nothing is more powerful than when your money makes money for you. It saves you time, effort, and provides you with the financial support to pay all of your bills. But very few people achieve that milestone where their money works for them and not the other way around. Chasing money is not really a bad idea because you're gonna make money, but chasing money your entire life is a horrible idea because your life isn't just about making money. You will have other responsibilities, especially if you move on and build a family. You will have to dedicate a portion of your time to your family. If you have hobbies and you want to travel the world, you gotta find ways to make money without actually spending your time, which is why you have to create many sources of income. And once you create them, then your job will be to maximize them and make them as efficient as possible. Passive income is the best invention of life. If you take a look at the richest people in the world, if you take a look at the pinnacle of success, you will realize that every rich person out there tried his best to create as many sources of income as possible. And when they have these passive income sources, then they had the time to build other things, build more businesses, and create generational wealth that lasts for centuries. Becoming rich isn't always about driving the fastest car or living in the biggest mansion. You could be rich by just making $20,000 a month. How? That $20,000 you make isn't made by trading your time, but you make that $20,000 from your passive income sources, from real estate and other sources of income. So Should something happen to you, if you want to retire, if you don't want to do anything, if you want to work on the projects that you're passionate about, you know for a fact that you still have $20,000 coming into your pockets every single month. And that's what true wealth is. And not driving a Ferrari or living in a big mansion. I'm not saying that you should not do that. Have the best car in the world. Live in the best possible house that you can. But that's not wealth. That is great if you have all of this. But what makes you truly rich is when you make enough money to retire without actually trading your time for money. That's when you have the real freedom in the world. $20,000 isn't gonna get you the biggest penthouse in New York City or won't get you the fastest car in the world, but they will give you the financial freedom to pursue whatever you want, do whatever you want. You're not attached to any place. You're not attached to any country. You can literally live wherever you want because you have a passive income of $20,000. So here are the 7 investments that will help you to get to financial freedom as fast as possible. The easiest place to start investing is the stock market because the barrier of entry is extremely small. You can start building your investment portfolio with as little as $100. That's nothing. Most people watching this video can do that. Of course, with $100, you can't do much. It's not gonna build you an overnight success where it will give you a passive income that can retire you. But nonetheless, once you start investing, you can start building up your portfolio to the point where it will be a passive income source that can get you to retirement. When you buy a Coca-Cola stock, for example, you turn yourself into one of the owners of Coca-Cola. Of course, one stock isn't going to give you a lot of power because a single Coca-Cola stock costs around $60 or something like that. And the total valuation of the company is almost $250 billion. But nonetheless, that still turns you into one of the many owners of Coca-Cola. And stock market is the reason why we have so many huge companies. At some point, we realized that instead of starting the business on your own, instead of just putting your own resources, a lot of people can come together, pour down their resources, and build and fund a huge project that will turn on to be a global multi-billion-dollar company. And that's the point of the stock market. Building wealth through the stock market means finding the companies that will tackle world's biggest problems and successfully solve them. Now, take a look at NVIDIA, for example. It's one of the largest companies out there, but that wasn't the case a few years ago. Over the last 12 months, every stock of NVIDIA has grown by probably like from $200 to over $800. And the total valuation of the company has grown to over $2 trillion. Why, you might ask? Over the last few years, we realized that everything we build needs computer chips. They need semiconductors. Regardless if you're building a car or a fridge or an air conditioning or even rockets that you want to use to start a war, for example. You cannot build any of these things without having semiconductors. And NVIDIA is one of the companies that builds those semiconductors. Remember back in 2020 and 2021, we had a huge shortage of cars. Why? Because we did not have enough computer chips to build these cars. And today there is literally a war going on around the world because there is such a huge demand for semiconductors, and there are literally a handful of companies that build some of the most advanced semiconductors in the world. That's why the stock price of NVIDIA has grown dramatically. And NVIDIA isn't alone. There are plenty of companies that have been growing dramatically over the last few years. And since OpenAI released their ChatGPT bot, they well realized that, wait a second, AI is the future. And that's why if you take a look at any company today, they're working on their version of AI. Even Tesla back then realized that Tesla could be one of the largest AI companies in the world. So the challenge to build your wealth through the stock market is to find those companies that are going to dominate the world in the next 5 or 10 years. You aren't going to make a lot of money today, but if you successfully pick the right stocks, if you invest in the right stocks that will end up becoming world's largest companies, you cannot just triple your wealth, but you can literally make 1,000% on your investment. And these investments will eventually turn into a passive income source because these companies will keep rising. I don't want to make it sound like it's easy to pick the right stocks because you have to understand how the stock market works. It's not an easy job. You literally have to know how to read financial statements, analyze their strategies in order to pick up the right stock. But even if you don't know how to do that and you simply invest in the world's largest companies, most likely you will be successful. Now, take Apple, for example. This is the world's largest company, and it's worth over $3 trillion. And over the last 12 months, it had a return of over 20%. I don't want to encourage anyone to blindly start investing because at the end of the day, you still need to understand the basics of the stock market to make these investments. But if you're not a risk taker, if you don't want to risk your money and lose in tech stocks, then you have to go with something that is much less riskier and will get you a decent return, which is why we have ETFs. An ETF is a financial company that takes investors' money and invests it in a certain type of assets. Let's say John, for example, does not know anything about investing. He doesn't know what are the stocks, how stock market works, how to analyze companies, and find out great stocks. So instead of risking his money, he can just buy a stock of the ETF that invests in certain index, for example. Now, one of the most popular ETFs are the ones that invest in the S&P 500. Now, if you take a look at the US economy, you will realize that it consists of a lot of companies. So what are the top 500 companies? And that's what the S&P 500 is. In order to be part of the S&P 500, the company should meet a certain criteria, which is why when we take a look at the S&P 500, we know that these are the top 500 largest companies in the United States and the most successful companies. And the list gets updated every single year. The companies that underperform, they leave the S&P 500. And the companies that outperform can join the S&P 500. So when you buy a stock of the Vanguard S&P 500, you're buying a small fraction of the total top 500 companies in the United States. So no matter what happens, no matter which company goes down, you know for a fact that most of these companies will go up. Most of these companies will perform fine, even though that a few of them will go down over the long run anyways. And that's easy to verify. If you just zoom out and take a look at the S&P 500 historically, you will realize that the average return annually was around 8 to 10%. Just take a look the return for every single year and divide it by the number of the years, and you will come to the number that is around 8 to 10%. Let's say you have $1 million and you invested in the S&P 500. You can be confident that your investments will make around 8%. 8% out of $1 million is $80,000. That's really great passive income. If you're making $80,000, that's about the median salary in the United States. And if you make that kind of passive income and you live in a cheap city, and if you live outside the United States in any of those cheap countries, you can comfortably live a great life without worrying about money at all. But here's the problem. Markets are not stable. You cannot expect your index to perform around 10% every single year consistently. So it's not really as passive as you think, because you have to withdraw your money very carefully. Because if you withdraw too much and you withdraw from your principal, then your money will start decreasing. While if you strategically withdraw just enough money, just the interest that you make on your money without actually withdrawing the principal, then you can enjoy the passive income of your investments indefinitely. You can indefinitely receive $80,000 every single year from your investments. So by buying a share of the S&P 500, you're buying a small fraction of the top 500 companies. Here's the problem with the S&P 500. You don't really get cash on hands. It's not like the S&P 500 will send you a check of $80,000 every single year. That's not how it works. You're not getting your money unless you sell your investments and realize your gains and pay your taxes. Now, that's the biggest problem. And because the markets are unstable, I mean, today it could be up, tomorrow it could be down. Like, for example, 2022 was a negative year, but 2020 and 2021 were really great years where the S&P 500 grew by around like 20% or something like that. So if you want to turn this into a real passive income source, then you have to strategically sell your assets in such a way that you don't touch your principal. So instead of selling 8% of your portfolio every single year, it's better to sell around 4%. Why 4%, you may ask? Because you have to factor in multiple factors. We have something called inflation. Inflation will eat your money alive every single year. Yes, now inflation is around like 4%. And just like last year or the last 2 years, it has been around 8 to 9%. But the average inflation rate is around 2%. So if we deduct 2% for market fluctuations and another 2% for inflation, we'll end up with around 4%. So if you're investing $1 million, then counting on anything more than $40,000 a year is really not possible. I know that 4% doesn't sound impressive, especially if you're starting and you barely have like a few $1,000s. And you're thinking, if I save like $100,000, then 4% is like $4,000. That's barely enough to pay my rent for a single month, leave alone for the entire year. It doesn't sound like financial freedom. But you have to understand that the true rich people have worked super hard to build that portfolio. So they already have like a portfolio of many, many millions of dollars. Some of them have a portfolio of $10 million, for example, and 4% is like what? $400,000. That's enough money to provide you with a luxurious life. Or let's say you have invested $20 million or $100 million. That's what the true rich people do. They know that it's difficult. They know that it's hard. It will take time. But they understand that the reward at the end of the tunnel is the true financial freedom that they have so desperately wanted. The only way to destroy that wealth is when you start spending the principal. I mean, the people who build that fortune in the first place never spend the principal. But once they pass that wealth to their kids or their grandchildren, these grandchildren who did not work hard for that money start spending not just the interest, but the principal, and that's how wealth disappears over time. Well, this is a great strategy to build a passive income source. This is not the only strategy that rich people prefer. Like there's rich people who have millions of dollars and they don't want to just hustle by thinking about when to sell their investments. They want to invest in a business and that business should pay them money every single quarter or every single year. And that's what businesses do. When you invest in a company, when you buy shares of a company, you become an owner of that company. So at the end of the year or at the end of the quarter, when that business turns on a profit, what should they do with that money? Now, there are two options that is in front of any company that is making money. One is to reinvest that money back into the company by expanding the company, by building another factory, hiring more people, or just buying up their competitors. Or if they don't do anything with that money, that's a profit. And that profit should be distributed to the shareholders, to the people who have stocks of this company. And that's what we call dividends. The companies that pay dividends are the companies that have already established their business models. They have passive income sources. They have built their products, they've built their infrastructure, and they know that in 5 to 10 years, nothing gonna change much in this industry. So they can share their profits with their shareholders. Take Coca-Cola, for example. This company has been around for over 100 years. What do they sell? They sell a soft drink that they created over 100 years ago. Yes, time to time they invest in creating a new recipe to improve their products. Sometimes they have to invest in a new factory to make more Coca-Colas. But overall, they don't have to reinvest a lot into the R&D because they have a stable business model that's making them a lot of money. Now, compare that to tech companies such as Meta. Meta doesn't know what's going to happen in 5 to 10 years in this industry. This is a brutally competitive industry that is changing every single year. Yesterday, Facebook was at the top of the world. Then we had Instagram that came in. Now, if Meta did not buy Instagram, it would have been its biggest competitor. Then we had TikTok that emerged, or Snapchat. This is a brutally competitive world where you cannot just distribute your profit to the shareholders. You have to use that money to outperform your competition. Or worst case scenario, like Zuckerberg always does, is that by buying up your competitors. So if you want to receive dividends from a company, you have to invest in companies that already have stable business models. Now, Warren Buffett invested $1 billion in Coca-Cola back in 1988. Now, Warren Buffett was a long fan of Coca-Cola. He knew that this is the best business that you can actually invest because they have a product that is in consistent demand all the time. And 5, 10, or 20 years from now, people will still continue drinking Coca-Cola. That's why he was confident that this is one of the best businesses he can actually invest his money. And every single year for the last few years, he has been receiving an annual dividend of $500 million up to $1 billion. That's a great investment. He literally invested $1 billion and now he's making that money every single year back. That's like 100% return on investment. Of course, you cannot make such an investment today because he bought the shares back in 1988. And now because of inflation, because the world has changed, because the markets has changed, the price of a single Coca-Cola share is much more expensive. Or let's take another example, Northwest Natural Company. You might have not heard about this company at all unless you're from Oregon, because this company is a distributor of natural gas. They've built their infrastructure in Oregon or wherever they operate, and they distribute natural gas to their clients. They do not have a charismatic CEO who wants to take over the world by sending rockets into space or changing an entire industry. No, they have a business model that they have perfected. They've been around for over 100 years. They have built an infrastructure, and nobody can come in and compete with them. Because if you want to come in and compete with them, you have to build an alternative infrastructure. So it's really expensive to compete with them, which is why they make a lot of money every single year. And because they have a lot of shareholders, they have distributed that cash to their shareholders, and they pay a lot of dividends. In fact, we have a list of companies that we call the king of dividends. These are the companies that have been paying dividends for at least 50 years. And it's not enough just to pay dividends to be on this list. You have to increase your dividend every single year in order to be in this list, because we have something called inflation. Inflation devalues the value of your money. So it's not enough to just pay dividends. You have to keep growing it. So if you want to invest in dividend stocks, if you want to invest in companies that will pay you dividend every single quarter or every single year, then you have a list of companies that consistently proven that they're reliable companies that will pay dividends. Now, they don't always pay the best dividends. Apple, for example, is one of the companies that have been paying dividends for the last 10 or 20 years. But it's not on that list because they haven't been paying dividends for the last 50 years. But it's one of the few tech companies that pay dividends. A lot of tech companies never pay dividends because the argument that they're making is that the competition is really fierce in the tech industry. So it's better to reinvest that money back into the company, and the shareholders will benefit from the rise of the stock instead of getting cash on their hands. The only problem with this strategy is that you cannot count on making more than 4% on your investment. I mean, the companies that pay more than 4% are the companies that are struggling. They're companies that want to attract cash into their business because they know that they're doing really bad. So if you want to invest in stable companies that you know that won't go bankrupt anytime soon, then these are the companies that pay 2 or 3, or in the best case scenario, 4%. But that should not discourage you because you're not building a passive income source overnight. As you start acquiring and building your portfolio, you will get to the position where your dividend stocks will actually pay you as much money as your job is paying you today, which is when you will be truly financially free. However, if you're not into stocks and you want something tangible, something that you can control, then you have to go into real estate. Because the problem with the stock market is that no matter how much stocks you own, you have no control over these companies. No matter, even if you own $100,000 or $1 million worth of Apple stocks, you have no control over Apple. At the end of the day, Tim Cook is going to decide everything. So if you want to invest into something that you will have a direct control over and will increase your ROI, then get into the real estate. It's one of the best sources of income that you can possibly create. I absolutely love real estate because I started in real estate. I began as a realtor and then I moved on and became a real estate investor when I purchased my property. One of the great things about real estate is that no matter what happens, you know for a fact that a paycheck is coming every single month. You know that you're making money from your property. Even if you lose your job, you lose your investments, you lose that project, your properties, if they're located in the right place, will always be rented and they will always put money into your pocket. Now, when I started, I could not get a mortgage for various reasons, which is why I had to save every penny I could in order to buy my first property. Now, it took me years to save for my first property, but it's really worth it. I paid it full in cash and got that property. That's not the advice that I would give to people because it's way easier and way better to get in and buy the property with a mortgage because first of all, if it's a $500,000 property, for example, as long as you have $100,000, you can get that property and you will start making money, even though that you don't have $500,000 in your pocket. So don't do the mistake that I did. I don't really regret it because at the end of the day, I know that that property belongs to me and every penny that property creates pays me. But nonetheless, it's a really difficult way for most people because most people having a job that they make $100,000 or $200,000, they will have to spend most of their income on themselves, paying their expenses. So saving for their first property $500,000 or $1 million in some cases today is really insane. The barrier to entry when it comes to real estate is really huge. You can't get into real estate with $10,000 or $20,000. The best case scenario, when you get a mortgage and you get in with a 20% down payment and you start with a small property that's worth like what, $500,000 or something like that. But it's not as easy as it sounds, because when you sign papers and you get a mortgage and you buy that property, you're stuck there for the next 30 years. Yes, if you're getting a mortgage to rent out, it's better to get a 30-year-old mortgage. Now, this is not financial advice. This is just an opinion of a random guy on the internet. But if you get a mortgage, it's better to get it a 30-year, especially if you want to turn it into a rental property. So if you made the mistake and you realize that this is not what I want to do, this is not the investment that I wanted to make, you're stuck there. Of course, you can just turn around and sell that property and make your money back. But I can tell you for a fact that if you do that instantly without breaking even, you will lose some of your investments. You will lose money on that deal. And if it's your first property, then every penny that you will lose on that deal will mean a lot to you, which is why you have to think twice before getting that mortgage, before getting into that business. But here's the best part. If you take that mortgage for 30 years, for example, it will most likely be a fixed rate, which means that your mortgage payments will be fixed for the next 30 years. But what will happen over the next 2 or 3 years is that inflation will force rental prices to rise. So even if your property will not make money today, you will make money in the future for a fact, because rental prices will rise. So 5 years from now or 10 years from now, that rental property will make you a lot of money. So you have to consider the fact that when you're getting a mortgage, it's not just about making your mortgage payments. You have to pay insurance, you have to pay maintenance, because it's a house. Something will always break down and you should be ready to pay all of those expenses. You should not get a mortgage if that's all the money that's left in your bank account. If you have $100,000 and you have to make a $100,000 down payment, then it's a bad idea. Make sure that you have an extra $20,000, $30,000 or $50,000, because it's a house. Something will always break down. And if you won't be able to rent it out for that specific month, you still have to make your mortgage payments to the bank. The bank doesn't care if it's a rental property or not. All the bank that cares is that you have to make your payments on time to the bank. That's all what matters. So in some cases, you will have to make those payments from your own pocket. The most important thing when it comes to real estate is location. If it's located in a prime location, you will know for a fact that no matter what happens, no matter how bad the property is, it will be rented out. Because when it comes to real estate, location is the #1 factor that people choose to rent a property. And that's how people become millionaires in real estate. They save enough money to get their first property, to get their first mortgage. Even if they just break even in the first year, they know for a fact that they will be making money in the future. So in 2 or 3 years, they will take another mortgage with the second property and turn it into a rental income. And in a matter of 10 or 15 years, they will have a bunch of properties that are making money, that are profitable, that are creating a passive income source for these landlords. But let's say that after studying and understanding real estate, you found out that real estate isn't for you because you are not ready to sign a 30-year-old mortgage. You're not ready to stuck in that city for the next 30 years. Because when you get a mortgage, you want to be close to that property in some ways, especially when you have just one property. You cannot afford to hire someone else to take care of it. So what if it's not for you? Is there an alternative option for people who want to get into real estate affordably without investing so much money, without taking a mortgage? The good news is that we live in the 21st century and the stock market is so advanced that it allows people to invest in real estate without actually getting a property or getting a mortgage. And it's really, really affordable. There's something called REITs, real estate investment funds. These are like mutual funds or exchange funds, just like the ETFs that we have talked about that invest in the S&P 500. But instead of investing in the S&P 500, these REITs invest in real estate. I mean, they're obligated by law to invest most of their money in real estate. They're obligated by law to distribute most of their income to their shareholders. They're obligated by law to make sure that most of their income streams comes by renting properties or flipping houses or anything that is directly related to real estate. So by buying a stock of these REITs, you're literally investing in real estate without owning any real estate at all. It's basically an investment firm that takes investors' money and invested in real estate. And there are a lot of advantages to invest in real estate through REITs. You see, when you're buying real estate, you have to make sure that you buy it in the right place because location is the number one factor when it comes to real estate. And you have limited resources. You can barely afford one property, leave alone 2 or 3 properties. But when we talk about REITs, these companies have like hundreds of millions of dollars. In some cases, they have like billions of dollars. So they don't just buy a single apartment or a single house there. They buy entire neighborhoods, and that's what separates them from you. So if they can buy entire neighborhoods, they can take any neighborhood, buy it entirely, and turn it into a luxury place that will rise in value eventually and make everything around it rise in value. All the properties around it will rise in value. There are different types of REITs. Some of these REITs are traded in the stock market, just like any other stock. You can buy them, you can sell them, but there are also private firms that invest in real estate. There are also REITs, but they're not traded in the stock market. Of course, it's better to invest in a REIT that is traded in the stock market, because when a company is traded in the stock market, they're obligated by law to share their financial statements to the world. So you can know for a fact that they're either growing or how much money they're making, if they're making the right investment decisions or not. But when it comes to private REITs that are not obligated by law to share their financial statements to the world, then you cannot be confident if they're actually making good money or not, if they're making the right financial decisions or not. REITs have their advantages because they allow you to get into real estate with minimal costs. But the problem is that they don't really pay as much as real estate actually pays. If you save your money and take a mortgage, you will make much more money on your investment than you can make from a REIT. But the problem with that is that you have to take a 30-year-old mortgage and you will have to invest a good amount of money. We are talking about hundreds of thousands of dollars even to get one property. The next investment that you should be looking into is a cash flow business. When most people think about starting a business, for some weird reason, they always think about starting a huge business, $1 trillion business that will rival Amazon or Apple or SpaceX or whatever. I don't want to destroy anyone's ambitions and dreams, but that's not the business you want to start if you want to build a stable source of income, if you want to build a business that will turn into passive income. Neither you should think about internet businesses, because today when we talk about starting a business, everyone thinks about an online business, such as social media management agency or Amazon affiliates, dropshipping, whatever. These are all great businesses. I don't want to undermine the importance of these businesses. These businesses could be making you a lot of money, like really a lot of money. But if you're building a business for the sake of having a passive income, then stop for a moment and think about more conservative businesses. Businesses that 1,000 people before you or 1,000,000 people before you have started successfully. Think of a coffee shop or a grocery store. Yes, these businesses are not like billion-dollar businesses. They won't be making you a lot of money, but these are the businesses that a lot of people before you have started and made every single mistake along the way. So if you want to start a grocery store, for example, you literally have a step-by-step plan on how to do it. It also requires a lot of time and an investment in the beginning, but there is nothing astronomically difficult about it, or opening a coffee shop. These are the businesses that could run behind you. Like, for example, if you start a social media management agency and you want to turn it into a cash flow business that will put money into your pocket, it's extremely difficult because you have to hire a capable CEO that can manage it and grow it. Especially when it comes to online businesses, everything changes so fast that you cannot just rely on one business model. This is the market today, tomorrow it could literally change. So if you bring a capable person that will grow that business, why would he work for you when he can just open a social media agency for himself and grow it? I mean, there is no reason for him to work for you. Well, if you open a traditional business, such as a coffee shop, for example, it's way easier to hire somebody who can actually run it on behalf of you. Because what matters in that business is the capital to start with. 100 years ago, people did their groceries. They went to coffee shops. 50 years ago, they did that. And they will continue doing that for at least next 5, 10, or 20 years. Whereas if we compare that to social media agency, for example, We have no idea how social media is going to look like in 5 years. So you continuously have to adjust your strategy in order to match the market and make money in that continuously changing industry. I'm not saying that it's an easy job to open a grocery store or a coffee shop, but because a million people have done it successfully before you, there is no reason why you wouldn't succeed. What's great about the traditional businesses is that, yes, you might not be making a lot of money like all of those internet businesses, but it's a stable source of cash flow. And if you're going to take this path, go ahead as a silent partner in a business. Like, find somebody who wants to start such a business, find somebody who wants to open a coffee shop or a grocery store, and go ahead as 50-50 or 30-by-70 or something like that. The reason is quite simple, because doing that business takes a lot of time. Building that business is more than just spending your money there. And somebody has to run it, and you have to be confident that it's someone who is interested in growing that business and making sure that it's cash flow positive. And if you go in as a silent partner, you will be making a good return of your money without actually doing all of that hassle. Of course, your partner who is actively managing that business will make more money than you because he's running that business. He will be paid a fixed salary. But nonetheless, you will have all the free time you want in order to work on your projects, on your work, on your business, or something that you want to grow and develop. But finding somebody who wants to do that kind of a business is not an easy job. So if you don't have that option, the next best option is to open a franchise. The great things about the franchise is that you don't have to reinvent the wheel. You don't have to come out with anything new or revolutionary, because the company will provide you with everything you need. The equipment, the people, the technology, whatever you need. All you have to do is that put the money up front and do some little work. And whatever challenges that you will come across in building that business, that franchise, that company has already went 1,000 times. So they have a solution to every single problem that you will come across. Downside of opening a franchise, you might not be making a lot of money. You will not be making as much money because you will have to share a portion of your profits with the parent company. But the good news is that you will reduce your risk and you will have a stable cash flow business that will consistently put money in your pocket. All of the investments that we talked about are really great. Some of them provide you with a high ROI, a return on your investment. Some of them have a lower ROI, but all of them are great in some ways. They have their advantages and disadvantages. Like real estate, for example, requires a huge capital to start with, but it's a really good passive income. On the other hand, if you're going to the stock market, for example, yes, you can start with as little as $100 or $200, but you have to be knowledgeable about the space. You have to know how to pick the right stocks. And it will take you some time in order to build up a portfolio that will actually be earning you a decent amount of money every single year. But what I have realized over my life is that as I have created my sources of income, I realized that my expenses started growing. So even though that my goal was when I was younger that I want to create a few sources of income, a few sources of passive income where I can actually not work at all, just enjoy my life. I realized over time that that's an impossible goal because this is life. Time is going on. The elder I grow, the more money I make, the more I spend, and the more I realize that I want out of this life. So for example, if you start building your sources of income when you are single, you will have a certain amount of money. But then you go ahead and create a family and you realize that, wait a second, you need way more money than you actually thought in the beginning when you started your journey to financial freedom. So don't think for a moment that there will be a position where you will not do anything. I mean, what's the purpose of life? At the end of the day, you have to keep growing because the moment you stop growing, you're going to go backward. The point that I'm trying to make is that don't think for a moment that there will be a position where you will create your source of income and just relax and do nothing. Yes, you will have to work. The question is, will you work on the projects that you're passionate about, or you will be stuck in a 9-to-5 job that you absolutely hate? No, you might like your 9-to-5 job. You might be a doctor and enjoy your lifestyle. You will just have your passive income sources that will consistently put money in your pocket. And you know that should you lose your job, you're safe. Your passive income sources will save you no matter what happens. So at the end of the day, you have to understand that the best investment that you can make is an investment in yourself. Yes, these are the investments that will pay you maximum amount of income. The investment in yourself has the highest ROI ever. There are different ways to invest in yourself, such as reading books, watching documentaries. And knowledge is great because it helps you to think differently. It helps you to think outside the box. It helps you to be more creative. But the problem with knowledge is that it does not immediately reflect in making your life better. Yes, you have read history books and now you know more about history, but how is that making your life better? Well, it might help you in some way when you think, come up with ideas, but it doesn't directly help you. The best way to invest in yourself is to improve your skills, to acquire new skills. Like, for example, if you learn how to set up effective social media ads, it will help you to make more money instantly. It will help you to boost the sales of your business. Or, for example, if you learn video editing, you can take that skill and instantly turn it into a source of income, for example. So learning a skills is the best way to invest in yourself. Just write down top 3 skills that I want to learn. I want to learn sales. I want to learn video editing. I want to learn social media marketing or whatever. These are the skills that will have the highest impact on your life. I want to learn how to invest in the stock market. I want to improve my social skills. If you choose to master the stock market, understand how the stock market works, then check out the channel because I have plenty of videos that will help you to get started, understand the basics of the stock market, understand how to analyze stocks and so on and so forth. The link for these videos will be in the description, or just go to the channel and you'll find them out there. Thanks guys for watching, and I will see you in the next one.